Scott, welcome. Talk to me, if you would, about the role that institutional investors play or are playing or need to play in the climate progress.
Sure. I mean, just to frame the issue, maybe to start there, the energy transition that the world has basically decided it's going to attempt to achieve is going to take something like, $200 or $300 trillion over the next 30 years. And governments, companies, there's just not enough money in the system to be able to support that. And so private capital is going to have to play just a critical part in providing some of that to companies to be able to do this. I would say a lot of when people think about private capital in the energy transition, they're thinking venture capital, they're thinking that whiz-bang new technology, but the reality is the bulk of that hundreds of trillions of dollars is going to be regular way, just brown to green transition. So going from the company of the old to the company of the new, and all of the capital that it's going to take to get from point A to point B. And that's where private capital can come in and be very helpful.
Talk to me about your own business, where sustainability fits in. Is it a factor or is it fundamental?
I think of sustainable investing really as offense and defense. On the offense side, we've been raising dedicated pools of capital, whether it's on the climate equity side, the climate finance side, where the intention of that product, where LPs, investors, are coming in specifically to invest in climate-oriented energy transition strategies. But even in our non-Article 8, Article 9 type products, the sustainability is built in part and parcel with what we're doing these days. And so even in our regular way private equity fund, we have sustainability goals where every one of our investments now, we have a target, for example, a number of targets, but one of which is a 15% reduction in carbon intensity over the life of our ownership. So that's baked into the underwrite, that's baked into the investment plan, and it is part and parcel with just how we do business now.
There's clearly ambition, motivation from business particularly. How do we scale that up though? How do we fill that huge climate finance gap that you were talking about?
That's really the crux. Like I said earlier, when folks think of climate investing, they're often thinking of venture or other real growth, real technology-based investing. But for Apollo certainly, but lots of private capital, sustainable investing is not just an asset class. It transcends all these asset classes. So from investment grade, sub-investment grade, structured finance, infrastructure, all of these asset categories need capital, and companies are just going to need more and more, I would call it partner capital, to be able to achieve this. And so it's really just making companies aware of what the art of the possible is as they're starting to think about how do I invest the capital necessary to do what it takes to go from point A to point B.
Scott, how do you see this playing out over the next, let's say, 5 years? We've got a very different economic environment at the moment. Where does climate finance fit into that?
The beauty of the energy transition is that the world has basically made the decision it is going to attempt to decarbonize, right? Now, whether we get there or not, completely another story. I'm actually optimistic. I think we will. But as a result of that decision, regardless of the price of oil, regardless of the underlying economy, more and more dollars need to be spent and will be spent year after year after year. And so this is all about just lining up the right opportunities and the right sources of capital for the different risk returns that are there.
Scott, thank you so much.
Great, Georgie. Thanks a lot.